You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, consumer sentiment. What can you say about consumer sentiment? Well, if you were a kid, remember when you used to go sleigh riding down a nice, slick, icy hill on your sled, but you never quite knew where you were going to wind up and if you were going to crash into a tree? Well, look at these consumer sentiment numbers. They're horrible. When you go from January 2020 on, there's an uptick now. But what does it all mean? Our good friend Mark Falter is with us now, and Mark's radio show is the Income Hour. Great to have you back on, Mark. So what about these consumer sentiment numbers?
Well, thanks for having me on again, Kerry. You know, and the survey of consumer sentiment, it's obviously what it's all about is it tells you how motivated people are, Americans, obviously, about the economy. And it is a lagging indicator. What that means is that by the time you see a positive, and by the way, this one wasn't so positive, but by the time that you see a positive report, the economy has already started its way back up. And when you see a negative report, the economy is already on its way back down. So the economy is actually ahead of these things because I'd like to say that people can forecast and vision into the future, but they don't when it comes to money and finances. They go by what's right here and right now. And right here and right now, what we're dealing with is consumer sentiment down. And it's basically the lowest it's been in a very, very long time, mainly because of people concerned about a recession. And that's kind of what we're looking at.
Uh-huh. So, there's the old saying that economists have predicted 6 out of the last 3 recessions, right?
Yeah, right. Right. And it's an interesting thing. As far as recession, I was talking earlier on another show that what the Fed is trying to do right now is trying to have what they call a soft landing. And that is not just a term as an analogy, it's a literal term that they try to emulate. But the Fed Reserve has only got success of 2 out of 11 times. Matter of fact, an interesting thing on that, about 4 or 5 weeks ago, Alan Greenspan wrote an article that says we're pretty much heading into a recession. He was the Fed chairman back in the 90s. He was one of the 2 that had actually succeeded at that. So he's pretty reliable.
Yeah, well, kind of like my ex. She wanted to have a cake and eat it too, and just doesn't work that way. But hey, by the way, there's a link in the show notes. You should click it. That will take you to a couple of charts that show the sentiment. So the sentiment's heading up marginally a little bit. Look, Mark, do you believe any numbers that this government is putting out at this point? If you believe everything you read here, then your neighbor who's the Uber driver and working 3 part-time jobs at fast food chains is living high on the hog.
Right. And it's what of course it says in the chart that you're showing there is that inflation is headed down, so consumer sentiment is headed back up slightly. But now let me though stop, Kerry, and say inflation is headed down. That's a good thing. And I think, as we get the CPI report here in the next few days, it's going to show that inflation's headed down. But it's still a far cry from where Jerome Powell wants to see it. We're hovering in the high 7s, I think. He wants to get it down to 2. So there's a big gap. And he's going to beat the crud out of the economy until we get it down.
Wait, he says he wants to get it down to there. You really think he does?
Yeah, I do believe he actually does want to get it down. It's something I was actually reading on. As a matter of fact, I decided I was going to do a radio show on this. It was interesting because we want to beat up Jerome Powell. But, really, okay, so what causes inflation? too much money being thrown at too few goods. In other words, too much demand, not enough supply. And I was on another radio show and we're like, why doesn't the Fed work at increasing supply? Jerome Powell actually has no control over supply whatsoever. The only thing that he does is controls monetary policy. And I'm getting off into politics here, but I agree. We should increase supply and that would solve this problem from a better end. But that's Congress and the president's job,
Mm-hmm. Well, that's the fiscal end of the equation. But Powell, the Fed has taken more and more power, and you can't just create more debt and think that you're going to borrow yourself to prosperity. It doesn't work that way, does it?
No, it doesn't work for the people that we work with every day of the week, and it doesn't work for the government. Now, it does work for the government for a while. Obviously, it does. And they are borrowing. They're actually at their highest debt, I think, in history. And, the only time they had debt this high was back in the 1940s when we were fighting a world war. But the debt is extremely high right now. The big fear that I have, I really hope this doesn't happen, because if it does, it could have cataclysmic results. And that is, if we get enough debt, where we run into a problem is if we as a country default on our payments on our loans, on our bonds. Mm-hmm. If that happens, it's going to have ripple effects that are going to be bad. Yeah. Mm-hmm. That's ultimately the end game, is if we continue to borrow too much.
What's a default, though? The default is just there's no such thing as a default. Let's face it, because they have the printing press. So
yeah, they do.
Keep printing more and more money. So, and that's what they've shown a amazing propensity to do. Even though everybody poo-pooed modern monetary theory, that's what we're living through now, aren't we?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita Copper-Gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Right. And like I said, Jerome Powell is in a scenario that I wouldn't want to be in his shoes. He is reactionary. He has to be reactionary. In other words, the Congress and the president do this. Well, crud, now I got to go over here and do this. His whole job is to try to negotiate a soft landing and to get inflation down. But, back to the question you asked a minute ago, do I think he wants to get inflation down? Here's what I think. I think he does not want to let inflation get to the point where it was back in Jimmy Carter's time frame. Now, Jimmy gets the bad rap for inflation. If you ask anybody we work with, hey, who's the worst fiscal president in history, they're going to say Jimmy. But actually, poor Jimmy, he catches the rap of two other guys. It lasted through Nixon's presidency and Ford's presidency. We had inflation that lasted a long, long time. And that's what Jerome wants to get ahead of here. And what kind of started, I don't want to say started it, but really instigated it, was the pandemic and the shutting down for 2 months.
Well, but let's go back to Milton Friedman. Remember what he said. Mm-hmm. Inflation is always, first and foremost, a monetary phenomena. So what part of that don't these politicians understand? Are they just playing stupid on us?
Yeah, I think that they are just, again, reacting. And what kind of is angering to me, and I think should be to everybody else that we're talking to right now, is they came late to the party. In other words, they should have gotten ahead of this about a year sooner, instead of lying to us, basically, in saying that inflation is transitory, and they should have been getting ahead of it then. Had they, we would be in a different boat than we are right now.
All right. Well, I agree. If they had just started a year and a half before, because they knew this inflation was coming. I knew it. That's why I bought a home. I bought a home before it hit. I bought a bunch of stuff. because I knew it was going to go up in price. Like if I know it, then certainly the Fed knows it. They have the best economists and the best data in the world, way better than what I can find. All they had to do was start every month, every other month, 25 basis points, up, ratchet it up slowly rather than going into full scale panic mode. But in the end, Mark, are they going to be successful in containing inflation and protecting your purchasing power? Can they do that without totally crashing the economy? That's what I want to know. And nobody seems to know the answer to this.
I think they're going to crash the economy, simply put, because just out of sheer numbers, if you again look at it, it's only been succeeded 2 out of 11 times. So the chances of you hitting it are less than 20%. It's about an 80-some% chance of them missing. And they're dealing with inflation that they haven't dealt with in quite some time. So I think, well, you got to understand, though, too, at the end of the day, people are like, oh, Powell's going to accidentally crash the economy. You don't understand, or the market, the stock market. Let's talk about the thing that people listen to us are concerned about. Powell's goal actually is to get the stock market down. There's 2 things that'll get people to quit spending money. Raise interest rates. In other words, if you got to go borrow money to buy a car right now, a used car at 7%, that's going to make you think twice. And number 2, get the guy's 401k to go down. For some reason, people, when their 401ks go down, they quit spending money. They don't feel as good about the future, and people spend less money in those scenarios.
Well, that's pretty cynical there, Mark. I got to tell you. And but look, it's like the economy runs on credit.
It sure does.
Mother's milk of the modern economic system, whether it's here, Russia, China, any place, all runs on credit. I mean, I was shocked when I was in China 5-6 years ago, and they were borrowing to buy cars because they were so expensive. It was shocking to me because I always had this thing, Chinese, man, they got all this cash. They don't go into debt because there is no social safety net there. And if something happens, if they have everything hits the fan, they got to be able to support themselves. Well, wrong. That's not modern China anymore. That's
No.
not the case. So when I look at that, I say, you tinker with this little machine enough, and there's going to be unintended consequences. And I don't believe that in the end, they're going to do enough to actually keep inflation down permanently. Look, you went back to Jimmy Carter and the Nixon and all those presidents, guns and butter, really go back to LBJ. Mark, that these inflationary cycles last sometimes for decades. They don't just happen for a year or two and then go back to normal. They go for decades. 5 or 6% inflation might be better than double digit. And we don't need to get into how they measure inflation now vis-a-vis how they used to, more honestly. But, 5-6% inflation, they just might throw in the hat and say, we'll live with it.
You bring up a very good point there, Kerry. And actually, I literally just thought of this whole paradigm shift as you were saying that, because you got a point, very good point. And that is inflation. The last time it was high, we got to go back to last time to compare what we're dealing with this time, because, it's usually a good indicator. And it lasted a very, very long time. Well, if that is in fact the case, and that happens again, and Jerome Powell does not get it down quickly like he says he will, and this is the same people that told us it was transitory, so why do we want to believe them on the second time? Well, then that says that the stock market could go down and stay down for a long time also, because what they're doing is they got to get that market down in order to get people to quit spending money. So a lot of people, I think right now, are of the opinion, hey, the market's going to go down this year. We know that it's going to go into a recession, but it'll bounce right back. I'll be honest with you. I kind of thought that before we just talked about this. And I thought, it could stay down for quite some time. I think people need to start residing to that fact and then start doing things to get on the right side of this higher interest rising environment.
Hey, just remember that the best things in life are transitory.
Right.
Right?
Very much so.
But interesting perspective. It's we still got a few more innings left in this game. We will see what they come up with. But Mark, best place to find you these days, your show and everything else, where do you go?
Best place to go, www.incomehour.com. You can listen to some of my prior shows. Again, that's www.incomehour.com.
Is this a daily show or weekly? How do you?
It's on the weekends. I run it on the weekends, but you can listen anytime you want. day or night on the website there.
Okay, well, you look like you're in someplace cold, judging from that well-used fireplace behind you.
We are Kansas City. Hey, but we won the Super Bowl last night.
Oh, that's good. And they didn't burn the city down?
No, just the opposite. We don't burn things around here. We leave that up to other cities.
Philly, man, forget it. They had to break out the tear gas. But in any event, hey, appreciate you coming on. If you've got a question for Mark, shoot me an email, kl@kerrylutz.com. Go to the site, financialsurvivalnetwork.com. Make sure you click that link so you can download those charts. And while you're at it, sign up for the free newsletter. Mark, pleasure. We'll talk to you again soon.
Hey, thanks.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.